This video is about the supercomputer connection, and what I'm referring to there is the supercomputers that are used in the stock exchanges, and the connection that the day trading Visual Basics system indicators have with the responses that the supercomputers have. Example, the supercomputer decides that next day this stock should have a tremendous gap up, gap down, whichever way it goes. If you're not familiar with it already, the day trading Visual Basics system has a formula. We've got the sensitive indicators, indicator power. We've got the formula power, which is the patterns, the conditions, and the signals. And we've got the procedure power, which is the continual analysis of these sensitive indicators and its relationship to market forces and price movement. So the patterns with good conditions, because if you have 10, let's say you've got 10 pink green bottom patterns, if you go to the list, there are pattern types up and pattern types down, and there's 20 some patterns in each of those pattern groups. One of those is down, or excuse me, one of those price up patterns is a pink green bottom. If you took 10 pink green bottoms, 2 or 3 out of those 10 are going to move up real strongly the next day. The others will move up a little bit. Some might have a zip green at 0 another day, meaning that the price stayed the same or even moved down. How and why are those 2 or 3 move up strong in relation to the conditions that we see within the stock? That's the question that you must ask yourself. When we have patterns with good conditions, we say we can see the market. We actually see the tiny market pressure movement from the sensitive indicator telling us that the next day a significant change in price is going to occur. That happens through the 22 market force recognition indicators on the 5 subcharts in the master platform chart. And those 22 might all be in a in this example I used a pink green bottom, but that's a named pattern. And the patterns within the one pattern group are examples of gaps. And what we look at is like right leg W's, or low angles down, low angles up, bottle nose up or bottle nose down, high M patterns. Those patterns are visual shape patterns. They're visual shapes of indicators. The high M pattern drives the price up a high percentage of the time. That's probably even higher than some of the indicators. And by that, what I mean is, instead of 2 or 3 times having a real nice candle in a indicator pattern that we see, out of 10 indicators, the right leg W increases maybe 5 or 6 times out of 10 normally. But again, we're looking at the 1, 2 patterns out of 10 that go up strongly. When you have patterns with good conditions, next day up movements occur. And by that I mean either gap up or strong green candle movements up. The number of supporting or number of patterns, for example, if you had 12 right leg W higher patterns out of the 22 market force recognition indicators, and then you had 6 or 7 indicators in supporting in supporting pattern conditions. You then have, if you had 5 with 12, you then have 17 out of the 22 lines telling you that the stock is going to go up the next day. When you get up beyond 15 or 16, normally those patterns with, and again, if they're all identical, they're a one pattern, all the same, they don't need much supporting evidence, because 17 out of the 22 are already telling you that the pattern is going, or that the stock is going to go up, and oftentimes gap up. Now, patterns with conditions, with good conditions, reflect what the supercomputer is analyzing. I don't know how the connection exists, but I can see the similarity, because when I have a pattern with good conditions, and especially if I have conditions that support gaps, I then have an identical situation. I mean, you have 20 pattern or 20 some pattern. I think there's 22 patterns up and 23 patterns down, if I recall. And a right leg W goes up, and it's in the pattern types up category. It's not in the pattern types down category. So the accuracy in the price direction is always there. That particular pattern will always go up. That explanation is probably the only explanation I can give that will come close to understanding how we have a supercomputer connection. How can the day trading Visual Basics system identify patterns with good conditions that support, and those conditions support gaps? How can we identify what the supercomputer identifies, except that we have a connection? Because the response is identical. The accuracy that we have in price direction is, I mean, it's 100%. And you might say, it can't be 100%. And granted, sometimes we might have a pattern that says this stock is going to go up, and it starts out right next to the previous close, and it goes up real high in a long green candle, and by the end of the day it's back down and it's 2 cents above where it started out. It went up, and we obviously needed to sell at that point, and then it came back down. So we in the system, we can't see that it's going to go up and then go back down, except if you go to your 1 minute chart or your 3 minute chart, and then you trade off of that chart, because you can pick the tops and pick the bottoms. There's no doubt about it. But that's the super connection that we think we have. I mean, I don't have a I'm absolutely positive scenario, but I do have the visibility of the sensitive indicators reacting identically with the supercomputer movement, those gaps. And I have no other way of describing it other than patterns with good conditions, and those conditions are the ones that support gaps. When you have those patterns with those gap conditions, I mean, a high probability of the time it goes up, gaps up. You may have just a small gap up with a long green candle, and then the next day a really long candle, green candle. And so you might have what I'm referring to as a 2-day movement in what appeared to be a gap up pattern. Sometimes that occurs. But the direction is never wrong. And so that's the connection that we see in with the day trading Visual Basics system and the supercomputer at the exchanges. And I'll tell you, we stumbled into a lot of the stuff that we built. I mean, you may have heard me say that we built 12, 13, maybe even 1,400 indicators. We picked 22 market force recognition indicators only. It works. I'm really glad it works. I often don't understand why it works, but I am excited that it works.